Hello, this is Lance Zimmerman, and welcome to the CattleFax closing bell for Friday, July 29th. Today's top story, Fed cattle futures basis trends. Feedlot risk managers are continually watching basis trends in the Fed cattle market. Basis is the cash price in a particular commodity market minus the futures price. A positive basis represents strength in the cash market relative to futures, and a negative basis signals a strong futures market compared to cash trade. Basis becomes the primary focus for hedging as producers transition from market price risk to basis risk. Feedlots with strict risk management plans are generally focused on basis trends as they place and market cattle. On Tuesday, Kansas feedlots traded fed cattle at $107 per hundredweight live, while the August live cattle's futures contract settled at $111.70. Basis at the time of the trade was a negative $3.50 to a negative $4 and signaled the weakest basis levels of the year. Feedlots accepted the weaker basis for a number of reasons. Basis has been relatively strong for feedlots so far in 2011. In fact, basis was positive for feedlots throughout most of the second quarter. Feedlots recognize that basis has the potential to trend lower in the coming weeks. Basis typically weakens $4 to $6 from early spring to mid-summer, and widening basis generally coincides with larger fed cattle supplies. Show lists in Kansas reached an annual high around mid-July, and while fed cattle supplies have been relatively current this year, feedlots realize they need to be aggressive with marketings to stay current. Weather is also a consideration during this time of year. Temperatures have been above 100 degrees for the last few weeks, and the threat of heat-related death loss and poor feedlot performance are motivating factors for aggressive marketings. It's worth noting that basis is the most volatile during the early summer months. Basis is generally the weakest and most volatile in July, and while basis levels this week were at their lowest point, feeders can anticipate a higher and more predictable basis going forward. Now, your weekly commodity markets. There was moderate trade in the fed cattle market, and prices ranged from $1 lower to $1 higher. Sales were established at $109 to $110 per hundredweight live and $174 to $175 per hundredweight dressed in the north. Sales in the south ranged from $107 per hundredweight early in the week to $108.50 later in the week. Feeder cattle values were steady to as much as $3 per hundredweight lower this week, while calves sold $1 to $2 lower. Larger than normal movement continues as the drought in the south is still forcing cattle off of pastures. Boxed beef sales were light to moderate this week, and the beef market gave up modest ground as the dog days of summer continue to take a toll on domestic demand. Corn values traded in a sideways to higher fashion as hot weather raised concerns about yield potential this fall. Thanks for watching, and remember to visit CattleFax.com for your latest market news and analysis.